Let's bring in Boris Schlossberg, Managing Director at BK Asset Management and a CNBC contributor. Boris, welcome. Let me cut right to the chase here. Are there other stocks right now you think could get monstered by the dollar?
They could get monstered by the dollar. I think, it's a little bit more of a subtle situation at this point. I think the currency trade is kind of a three-way trade where the dollar stays more or less stationary, doesn't really rally much from here. The euro strengthens and the yen remains weak. So if you have that kind of a three-way trade, I actually think there are stocks that benefit in each one of those scenarios. We can talk about them at detail if you want.
Sure. So let's start, for instance, with one that I think you're maybe more cautious on. Is it Diageo?
Yeah, Diageo. So the story here is if euro strengthens, Diageo is a great company and long-term, absolutely, a great long-term hold. But here's the problem. It's a company that produces in Europe whose main selling markets are actually North America and Asia Pacific. And organic growth in North America has really slowed significantly. I think sort of like the whole COVID, everybody having cocktails trend is really tapered out for a little bit for now. And that I think is going to have problems for them just on an organic basis. And then more importantly, because of the currency, if the euro strengthens, I do think it will strengthen against the dollar, it's also going to create a currency tailwind. So long term, I think the stock is great. But for the next 6 months, it's going to be problematic. And you see the stock coming off very much off the COVID highs now, really trading kind of very weak, and I think it's going to remain weak for the time being.
And so to be clear on the kind of macro trade here, you think the dollar will it's not necessarily going to break out further from here. You see maybe range bound, you see the euro strengthening.
Right. So and this assumes the following scenario. Basically, if you think that we're kind of muddling on through here economically and the Fed remains gradual. That's the critical thing. If we're staying at 25 basis versus 50 basis point hikes, the umph in the dollar that the dollar had is kind of gone. And I think that whatever rallies we have are essentially going to be tapering off. That means you're not going to have super strong king dollar going forward. Dollar really strengthens on two conditions. Either it just runs ahead because of interest rates, or it's a safety trade. And I think as long as the global economy kind of muddles through and the rates are going to get closer to terminal rate than they've already been, because we've already done like most of the yield work, then I think the dollar rally is tapered. And in that kind of condition, yeah, you're not going to see dollar strength really, really hurt too many people.
Yeah, very well, and that'll be a relief. Whereas you do think that euro strength could be something more to watch for European profit margins. So
correct.
Dollars kind of range bound.
They have a lot to catch up going on there. Yes.
Oh my gosh, that's a whole other sort of ball of yarn. Japan, you're sort of thinking the yen stays relatively weak here, and that gives way to what could benefit American and Japanese multinationals, and that would explain why both Nike and Toyota you think are places that people should be looking right now.
Exactly. So I think this is the other interesting, the nuanced trade here is that I think the yen remains relatively weak. And that's because the Bank of Japan is pretty much going to the new BOJ Commissioner, Mr. Oyeda, who's coming in, said he's going to continue the policies of Mr. Kuroda. And that means just kind of a very, very controlled, yield-controlled move on the BOJ monetary policy, meaning that they're really not going to tighten too much. They did have very high inflation, but most of it has been energy. And since oil is relatively temperate, I don't think they're really going to get hard. So if the yen stays relatively weak, I think Toyota is kind of a surprise trade here. The stock has really fallen about 26% since 2022. It's trading at 10 times earnings. It's got a 3% yield to it. And even though they're kind of late to the game, they're finally coming around to the EV market. They have plans to basically have 3.5 million units by 2030. They're going to have 30 new models. And the one thing we know about Toyota is it is a marketing and a production behemoth. When they want to get serious about something, they will get serious. Their brand globally is second to none, in my opinion. So I think if they start stepping into this market, they're going to really perform well. And I really like the stock just on a fundamental and evaluation.
Fascinating. And we know you're a big fan of Nike and have been for quite some time. But to see the bigger landscape here, this is why people watch, Boris. We love it. Thank you so much for your time today.